Assalamualaikum warahmatullahi wabarakatuh. I am Siti Aisyah binti Muhammad Zaini, and today we are going to learn about chapter 2, which is the topic is Malaysian economic growth. In this chapter, it's about national income in bracket GDP and GNP measurement. So, national income is one of the main scopes of macroeconomics. It's a concept that is most significant in macro accounting, and it's basically used to measure the performance of economics. So, it means that it's a measurement they use to solve the economic problem that is related. By Mukiao, he said that a country's economy requires an amount of capital to generate production and to sustain economic development. In a situation when government spending exceeds its tax collection, it has a budget deficit, which it finances by borrowing from the private sector or from foreign government. So, the next one is a number of national income and output metrics, including gross domestic product (GDP), gross national product (GNP), and net national income (NNI), are used in economics to quantify overall economic activity in a country or region. So, it's basically to measure all of the activities that they do in their countries or region by using all this type of measurement. So in specific, all the steps concern the counting of the total quantity of products and services provided within a given boundary. The border is generally specified by geography or citizenship, and goods and services that are counted can also be restricted. For example, some measures count only money exchange goods and services without barter goods. So while other measures which seek to include bartered goods by imputing them with monetary values. So it means they only want the profit is in money form, so not with a good in the form of goods or anything.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Kamilah binti Muhammad Rafadli, and today I want to present about summary of macroeconomics issue in Malaysia. Summary of macroeconomic issue. Malaysia, known as the fourth largest economy of Southeast Asia, and it continues to perform strongly due to a strong global demand for commodities such as oil and gas, and improving labor market, a pro-cyclical budget, and ample infrastructure spending. The government's declining expenditure such as lowering public and private investments, and it reduced economic growth. It was estimated 4.3% in 2019 due to the outbreak of the COVID-19 that recently happened in our country. From 14th April 2020, IMF forecast state GDP growth is expected to fall as much negative 1.7% in 2020 and pick up to 9% in 2021, subject to the post-pandemic global economic recovery. So these are the macroeconomics issues in Malaysia. Political crisis, the fragility of its current government. As countries globally grapple with the coronavirus outbreak and the resulting economic fallout, Malaysia faces an additional threat, which the crisis started when several political parties joined forces and tried to form a new government by claiming majority seats and support in the Dewan Rakyat, the lower chamber of the bicameral parliament of Malaysia. Without going through a general election, it was accomplished through the withdrawal of the Parti Pribumi Bersatu Malaysia Bersatu from the Pakatan Harapan coalition and through the support of several MPs from the Parti Keadilan Rakyat (PKR), led by its Deputy President Azmin Ali, who left the party. The Prime Minister Mahathir Mohamad resigned as a result. Weakening of Malaysian currency. Ringgit sinks against major currencies in early trade. The ringgit was lower against the US dollar in the early session today on weaker demand for the local note due to the country's bearish economic outlook. Analysts say an open economy like Malaysia's is vulnerable to external weakness brought upon by uncertainty caused by the COVID-19 pandemic, which has significantly affected global economic growth prospects and halted a majority of economic activities worldwide. Also, it became weakened when Malaysia was thrust into political turmoil earlier following the unexpected resignation of its Prime Minister Mahathir Mohamad back then. The drop in oil prices. The impact of oil prices on the macroeconomy brings an impact towards Malaysia's real economic activity. The impact of oil prices on the macroeconomy has long been a topic of interest to economic researchers. We analyze the impact of oil prices on Malaysia's real economic activity, inflation, fiscal sector, and financial variables such as stock prices and the currency market. The result of our study suggests that Malaysia's potential growth tends to be lower during periods of significantly lower oil prices. Also, every $1 increase in Brent oil prices is associated with an increase in real GDP of approximately 6.6 MYR million, an increase in CPI levels of 0.03, and an increase in annual fiscal revenues of around 339 million Malaysia. Furthermore, a percent increase in oil price also results in a 0.04% increase in the stock market index and 0.03% appreciation of the ringgit the next day. We also find significantly volatility persistence in an intersector volatility spillovers between the oil stock and the foreign exchange markets. Going forward, Malaysia can increase its resilience to oil price movements by further diversifying its economy, its export, and its fiscal revenue base. The fall commodity export prices. Malaysia November palm oil and stock slip as output exports fall to a more than 3-year low as production slumped and exports fell more than expected. Data from the industry regulator. November end inventories in the world's second largest palm oil producer fell 0.58% from the previous month to 1.56 million tons, the lowest since June 2017. The Malaysian Palm Oil Board (MPOB) say MYPOMS TPO. Crude palm oil production shrank 13.51% from October to 1.59 million tons, its lowest since March.
Assalamualaikum, my name is Sidina Fatimah binti Sahari, ID number 2019212738. I'm going to discuss further about a discussion based on the macroeconomic theory. What is the discussion about? First, we need to know a theory about gross domestic product, which is GDP. In theory means the total market value of all final goods and services produced within a given period of time by factors of production located within a country. Measurement of GDP can be in the form of market price or factor cost. Market price means the current price in the market through the forces of demand and supply, and factor cost means the prices of output that is valued based on the cost of factors of production. Now I'm going to proceed with a main sector of industry based on the table. Agriculture employed 10.1% of Malaysians in 2020 and contributed to 7.3% of GDP. Malaysia is the second main producer of palm oil and tropical wood and the fifth largest exporter of rubber. Malaysia has successfully developed its economy based on raw materials and has significant reserve of oil, gas, copper, and bauxite. Next, industry contribute to around 37.4% of GDP and employed 26.8% of the active population in 2020. Malaysia is one of the world's largest exporters of semiconductor devices, electrical goods, and appliances, and the government has ambitious plans to make the country a key producer and developer of high-tech products, including software. Furthermore, the service sector employs the majority of the population, 63.1% in 2020, and accounts for 54.2% of GDP, which is due mainly to healthcare services, transport, distributive trade, and tourism. Since early 2020, Malaysian had affected by COVID-19 that started in Wuhan, China. Not only in Malaysia, but all the countries around the world were affected by the coronavirus. The impact from COVID-19 made economic growth in Malaysia at a low rate because to stop the coronavirus, all the citizens need to stop their economic activity for a few months and stay at home. However, our Deputy Minister in the Prime Minister's Department Economy, Arthur Joseph Kuro, said that the retail sector is beginning to chart a gradual recovery while the hotel occupancy rate nationwide has increased to 23.4% after the Conditional Movement Control Order (CMCO) was lifted and cross-state travel was allowed. Other than that, crude palm oil price had reached a level above 3,000 per ton in November at 3,422, while the SMR20 rubber price had risen to the highest level to 6.33 cents per kilogram last month. As Malaysia's GDP is expected to grow between 6.5% and 7.5% in 2021, driven by the anticipated improvement in global growth and international trade. So, what can I say here is Malaysia still have a big chance to reform back the economy.
Assalamualaikum, my name is Arana Aisha and I would like to present our conclusion. To sum up, Malaysia's GDP increased by 0.7% in the first quarter of 2020 from 3.6% in the fourth quarter of 2019. The growth in this quarter was supported by services sector 3.1% and manufacturing 1.5%, while the other sectors registered negative growth. Meanwhile, in second quarter, Malaysia's GDP contracted 17.1% from a marginal growth of 0.7% in the first quarter of 2020. On the production side, all sectors recorded a negative growth with the exception of agriculture sector. Subsequently, Malaysia's GDP fell at slower rate 2.7% in the third quarter from a double-digit fall of 17.1% in the second quarter of 2020. Hence, the COVID-19 outbreak has changed the economic landscape in terms of production level, household spending, investment and labour market. In the third quarter of 2020, a continuous recovery is seen in the country's economic performance, with the reopening of economic activities and lift the ban of interstate travel. As more economic sectors resume, the unemployment rate slightly decreased to 4.7% in the quarter as compared to 5.1% in the second quarter. That's all from me. Thank you.